Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having a great day wherever you are in the world and whatever time it is for you. As always, it is Friday here on the podcast because it's always Friday. And so we're bringing that Friday energy to you. Today is a good day because we have Zachary Beach with us on the podcast from Smart Real Estate Coach. Zach has a lot of experience in creative financing. And as you guys know, that is one of my favorite topics because it makes getting deals done easier, and it makes deals that otherwise would not get done, makes you able to bring those ones to the table, to the closing table. So I'm excited to jump into this. Zachary, thank you for hopping on the show.
Gabe, I'm excited to be here. And yes, it is always Friday anytime we're on your podcast, for sure. It's gonna be a heck of a good time.
There you go. I told you before we got on here, we always like starting with stories. We like to hear how people got to where they are. I'm sure you got a good story. So why don't you take us to the beginning of your experience in real estate and tell us how you got here?
Oh, yeah, for sure. Well, I always grew up, I like to say I grew up on the poor side, or I was a poor kid growing up in a rich town. So as you can imagine, that really was a chip on my shoulder for a majority of my, high school, college. So a majority of I would say my motivation was proving people wrong. So when I went off to college, I just went there because my teachers told me I couldn't go. So I ended up making it there. So what I ended up doing was I just ended up studying whatever the heck I wanted to study at that point and wasn't really sure what I wanted to do with my life. So I did what every, good bachelor's degree in business would do, is I became a bartender. So I bartended from about 20 to about 24 years old. And honestly, by the time I was about 24 years old, I got super burnt out. The reality is what we call the industry, me and my wife are both bartenders. And the reality is by the time you're like in your mid-20s, you need to really make a decision on whether you want to move into like management or ownership of bars, indoor restaurants, or you're going to be a lifer in regards to the bartender world. And that just wasn't what I was looking for. So I was staying up super late at night. And then I also started personal training too in the morning. So I got burnt out really fast. And I saw that my father-in-law, Chris, who's probably on this podcast as well at one point in time, he got crushed in 2008 and he was looking for a new strategy to get back involved in real estate. And he got involved in this creative financing, or what they used to call back then was buying on terms. And so he started doing that. So I approached him and said, hey, I don't know if I'm going to like real estate. I don't know if I'm going to be good at real estate, but I would love to try it to see if I can bring some additional value in, because it's going to be better than what I'm currently doing. So I brought that on as well, started from the bottom, cold calling, expired listings. And then at about 6 months in, I ended up getting my first deal, and I kind of pulled the plug at that point. I got rid of all my shifts as a bartender and got rid of all my clients, and I went full-fledged into real estate investing. And kind of everything's been history from there. It's about a decade now.
Right on, man. Actually, I right after college, I bartended as well, and that is it's a rough life because you never get to sleep before like 1 or 2 a.m. And then if you're trying to do anything on the side, it's just you're just dead tired. And so being able to go from that and then also get your feet stable in real estate, that is definitely that's a feat and that's an accomplishment. So it's good you made it. And you mentioned 6 months. I just kind of want to pause on that because a lot of people, when they get into real estate, they are expecting, I know when I started, I was expecting to make $50,000 within my first couple of months.
Sure.
And then you start cold calling and you realize it's a lot harder than you expected it to be. Let's talk about those first 6 months. How'd you close that first deal?
Yeah. Well, if I was in the position I am now, I more than likely wouldn't have cut all ties on everything within 6 months. Me and my wife, we were young. We were in our 20s. We had no kids, no real responsibilities. We built up some capital through network marketing as well. So we still had that income coming in as well. And I knew that if worst case scenario, if I screwed up, I could at least go grab some shifts in order to pay the bills as a bartender. So I didn't have, like, it wasn't like I had all these responsibilities. So nowadays it would have been a lot long of an arm ramp. But at the end of the day, what ended up happening was it took me about 6 months to fill up my pipeline. It took me about 6 months to get a good understanding of the front end of the business, not the business in its entirety, but just understanding of good scripts, follow-up, funnel. And then eventually, as I built up that funnel, I then had enough leads that were coming in and enough appointments that I was going on that it just became a numbers game. And eventually I stumbled across this gentleman who was going through a divorce. He had no equity in his property. And we ended up acquiring the property subject to the existing loan on a wrap mortgage, actually, because that gentleman needed to show that somebody else was servicing his loan. So I ended up doing my first creative deal that way. And really that deal in itself had many, many ups and downs for sure as well. And you mentioned, hey, it was a big feat to go from bartender to full-time in real estate investing. There's many times that I didn't think I was going to make it. So just so listeners out there, like, if you're not finding success within that first short period of time, just know, like, everybody has their incubation period until they start to find that success and that momentum.
Yeah. Second that. There were multiple times when I just felt like, this isn't going to work out. I'm not cut out for this. I'm going to fail. And then you gotta accept those feelings, and you just got to keep pushing forward. Eventually things will work out if you just keep focused on the next task and the next opportunity. But man, those troughs, those valleys that you go through can definitely be hard. So the first deal you did was creatively financed. It wasn't a wholesale. It wasn't a fix and flip. It was something that you actually had to, you set out, you did a wrap mortgage. Take us through, since creative financing is what you guys do, take us through the different concepts of creative financing, and the different areas that you would use them in.
Oh, yeah. What's interesting is I get asked all the time this exact scenario in regards to, hey, your first deal was creative. Honestly, it was about like 99.9% of the deals I've ever done in my 10 years have been creative. So when I hear wholesalers, fix and flippers, they'll come to me and say, like, yeah, I want to get involved in creative financing, but I believe I got to go do a whole bunch of wholesale deals in order to get there. Look, I was naive enough, because that's all I knew, that creative financing, like, that I could go talk to sellers and that they would give me a property with no money, or they would let me take over their loan. I didn't have all this additional baggage from, and I'll call it quote unquote baggage or knowledge, right? That was plugged into me from the traditional world. I just knew creative day one. And that's where I kind of built up. I didn't do my first wholesale deal until like last year because there was no need at that time. So when I look at creative deals, there's really two main pieces to it. And then I'll kind of go into like our three main strategies. And this isn't any different than other pieces of real estate. We just solve different problems. Right, because that's all real estate is. It's a people business. You just happen to be acquiring real estate. So really there's two things. We call it motivation, right? Everybody's familiar with that. And motivation, though, can be good or challenging, right? So a motivated seller could be somebody that wants the most amount of profit and they have a free and clear house. But if they sold traditionally, that they'd have to pay closing costs, commissions, right? Or from a wholesaler standpoint, they'd be trying to get at like 60 cents on the dollar. So motivation could be positive. All the way to the other side of it could be extremely challenging. Like right now, we see lots and lots and lots of subject to deals because sellers are behind on payments. We have an all-time high in the country of credit card debt, which means that obviously affects their monthly income. You have lots of properties that are now being reassessed from a tax standpoint because of the COVID prices and the drastic increases. And now all of a sudden somebody can't afford their monthly payment because their escrow's gone up so much. So that's what we're starting to see now, or a major portion, and that's the financial hardship. So you kind of look at the entire spectrum, everything from really positive, they have a real estate problem, to negative, meaning they have a financial problem. So once we understand that motivation, then the finances come into play. That's where I need to determine purchase price, need to determine if there's a mortgage. If so, what's the monthly payment? If there's not a mortgage, what's the taxes and insurance, what the seller was hoping to net. So now we're just breaking it down financially, right? Which actually tends to be, in my opinion, the easier part of the structuring than actually the people side, because now we're dealing with like emotions, right? Especially with single family properties.
Yeah.
So once we determine those two things, that then starts to kind of tell us exactly where the strategy that we're going to use. Now, at this point in time, most people always say like, hey, creative financing seems to be a little bit more complicated. But the reality is it's less complicated than a traditional sale because there's honestly less moving pieces. It's just you have more options. So then boiling down those options are as simple as asking specific questions. And once this question gets answered this specific way, this is the strategy that we're using. So again, for example, free and clear property, I'm very likely going to seller financing. Seller financing is just simply meaning that instead of going to a bank to get financing to buy the house, the seller provides the financing on the property. Happens very often, especially sellers that want the most amount of profit, or somebody that wants tax benefits associated with pushing out capital gains over a longer period of time, or inheritance, things like that. But if we also kind of check the next
I'm going to jump in there real quick. So seller financing, this is something that I do a lot on the commercial side. But I have a while, it was 2 years, 3 years ago, we were really hard on single family, and we couldn't get a single person to accept seller financing on the residential side. Commercial people, it's very accepted. I've done plenty of deals seller financed, but I can't get anybody to do residential. How do you have that conversation? How is it, what is the key to getting a residential owner to accept seller financing?
Yeah, not only do we get seller financing accepted, we actually get 0% interest rates. So principal only payment, seller financing accepted.
That's crazy. Now, you guys are obviously better at this than I am.
And it's not, I would love to say, yes, I am super skilled. I'm like, the NFL player of real estate. But the reality is I just ask specific questions.
Okay.
And then more importantly, we nurture them in a different way. This is just as much as an education business as is a real estate investment business. So the people that get really successful in creative financing or on terms are really good at educating and solving the problem. So if a seller comes to me and has a debt-free house, or we're communicating with them, I'm really trying to identify how I can provide a solution. And a majority of the time, them getting all of their money is not the solution. So by having a simple conversation of understanding, hey, what's important to them? And we do this quadrant is really what we built around. And seller finance is really 4 pieces. And I only bring up one of those pieces if they bring it up. So 4 pieces meaning what's the price? What's the down payment? I don't bring that up unless they bring it up. What's the monthly payment or the interest rate? And then what's the term or the time frame in which they need the remaining balance? Because a majority of the structures that we do are balloon payments. Now, the reason why we do that, though, is because and maybe we'll talk about this in a little bit, is we specialize in selling on rent to own. So it's not that I need 20, 30-year loans. I just need somewhere around like 60 months in order to execute on a strategy. So by determining by determining that quadrant, now we can start to piece together what's important to them through the structure. So some sellers will be like, all right, well, what's most important to me is price. All right, well, if that's the case, then the best way to structure this, or sellers that we buy from that really appreciate this, are those that are willing to, sell the property at this price, but we don't give a down payment. We just structure a monthly payment, and we cash out in a certain period of time. So we just use that format in order to get the best seller financing structure for all parties.
Interesting. And so I think the key there is, you mentioned 60 months. Generally, when I do seller financing, we do 7 to 10 year balloon payments. 60 months. What is that divided by 12?
It's 5 years.
5 years. Okay.
Yeah.
And so you talk a little bit about what your strategy is. Like, what's your end game when you're doing seller financing?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah, great question. So, and not to say that we don't get those long terms, but it's not that we need those long terms in order to do so. And that's also why we can get those 0% interest rates, because it's like they're not waiting forever. They're waiting like they're waiting 5 years. So our exit strategy is we work with buyers that need time to qualify for bank loans. That's anywhere for somebody that is self-employed, which means they need roughly 24 months of seasoning. That could be somebody that had a legitimate hiccup in their credit. Heck, everybody had a hiccup in their credit during COVID. And if you kind of look at the overall market of people that can't qualify for bank loans, it's anywhere from 60 to 80% of people nationally can't walk into a bank and get a loan. Now, that only is increased as the loan rates continue to be at the high sixes and as they peaked in the sevens. So that only increased. So the buyer pool in which we have continues to grow. And I know that there was some studies that came out recently that said the entrepreneurial rate, meaning that people going into business for themselves, is only increasing again over the next couple of years as well. So that then buyer pool continues to grow for us.
Right.
So what's cool is that I may be the only person that has a rent-to-own property in a specific town or in a specific county or a specific city. So now we have that giant pool. So once we have that pool, now we're going to work with that particular person at the beginning through a underwriting or basically a quasi underwriting process. And then that's going to determine how much non-refundable deposit they have. It's also going to determine how much money they make on a monthly basis so they can sustain the property through rent. And then also what the time frame is or the mortgage readiness date for when they can go qualify for a bank loan. And that's where we establish our federally trademarked 3 payday system, because we're getting non-refundable deposit, that's cash now, a monthly cash flow monthly, and then we're getting back-end profits when the equity cash is out. Now, our average buyer, and this is where the time frame comes in, our average buyer now needs 24 to 36 months. So that's why that 60-month time frame really works out great. And if I'm doing seller financing and I'm only paying principal on that deal, you can just think about it. If it's $1,000 a month, we're hammering down $60,000 in principal. So that's how we can actually create these big profits on these deals in a short period of time, because we're getting somebody cashed out sooner, but we're also paying only principal.
Got it. And another key that you mentioned in there, these are lease to own. So you buy them seller financing, and then you're automatically going and essentially renting them out to someone who has the intention of buying the property.
Correct. Yep. Yeah, it's about 90% of our exit strategy.
Got it. Okay.
To your point, if I'm getting, and the seller's open to 10-year terms, things like that, well, now we open up alternative options, like this could be a long-term rental for us, could be an Airbnb, short-term rental, you name it. Now the exit strategies can change, but the acquisition strategy stays the same.
Right. That makes sense. So an important piece to your guys' overall business model is you guys work on both the front and the back end. You're actively going out there finding sellers, but you're also actively going out there and finding buyers who can, who are in the situation where they need a solution such as yours. Maybe they started a business, they're making $120,000 a year, but the bank doesn't care because they've only been doing it for, a year and a half or something like that. So you guys are working both the front and the back end for sellers and buyers.
Yeah, that's absolutely correct. We actually buy creatively, and clearly we sell creatively as well. And that's how we're able to generate these profits in which we're doing on a consistent basis, for sure. And that's what I mean by we solve different problems, right? Because the same seller in that scenario that wants their money today, they're way more likely to either go with an agent and know that they're only going to get, say, 93% of their ask, Or if it needs a lot of work, they're going to a wholesaler and knowing they're only going to get 60 to 70 cents on the dollar. We're solving a different problem there.
Yep, makes sense. So that is, I mean, we are only talking about free and clear right there with seller financing. Let's talk about the much more common scenario where somebody has debt on their property,
Sure.
especially if they have debt that's high interest and they just can no longer afford that payment. How do you have that conversation? What are the solutions that you provide? And then what's the exit strategy there?
Yeah, so if somebody has debt, and I'm just to keep this like really, I would say clear, right? So we'll operate on two sides of the fence. Let's talk about somebody that's completely leveraged, right? They very little equity. That's when we're going to typically go buy a property subject to the existing loan. Now, we're only going to do that if the debt that we're taking over is good, right? If the property can still cash flow and there's still the ability to make money off of this. Because you mentioned high interest rates. The strategy really with utilizing subject to is that we're actually buying people's debt from 3 to 5 to 10 years ago.
Right, yeah.
Which is
where
the
like
most common deals are
3%.
exactly, or 5% or less.
Yeah.
Right? So then most people would then think, right, like, then why would that person give that up? Well, the truth is just because they have a good, a good mortgage rate doesn't mean that they can either afford that mortgage rate, or it doesn't mean that they haven't had other things in their life that have determined them to move, right? How often are people, I think somebody lives in the house on average anywhere from like 3 to 7 years. It's not very long.
And a lot of people just don't want to be landlords. I've talked to many people in my own life who they're talking about selling their house and going into a new one, and I'm just like, why don't you keep that and rent it out? And they're just like, I don't want to be a landlord. I don't want to, have this burden. And so in that situation, people just don't want even if it does cash flow, they don't want that opportunity. Yeah,
the interesting part is, right, because you and I, Gabe, we're in the game and this is what we do. We always ask that question. Then one of the most common mistakes as brand new real estate investors is that we make assumptions. It's like, well, why wouldn't they just keep it? So they don't want to sell to me. Like, no, you have to ask the questions, because the reality is most people don't want to be in real estate because they don't understand it. So it may be clear as day as a deal for us, and that person's sitting on a gold mine, but they don't want it. So that's a very valid point there.
Yep.
So when we look at these subject to deals, now what we're just going to do is we're going to go acquire the asset, which means we're going to buy it and the title is going to transfer to us. So ownership's going to transfer. We use a trust. I don't want to get too deep on the podcast, but for estate planning, there's a Garn-St. Germain Act of 1982, which allows you to acquire real estate in a trust without a due on sales clause being called. That's the way our always have us do it.
Yeah.
So you acquire this between me and you, Gabe, right? So you acquire the property in a trust, and then the beneficiary then is going to be the LLC. Or if you even go further, if they want to protect you even further, then it would be originally the beneficiary as the seller, and then the seller relinquishes their beneficiary later on in some more documents. So it's not pulled up on the original sheet of the trust. So a whole bunch of different ways around that. And the reason why that's the case is we are protecting the seller, because in most circumstances, the subject to deal is because they're in a financial challenge and you're trying to solve their problem. So we're trying to protect the seller from an accelerated mortgage.
Yeah.
And some really cool things too, because I always get these questions, which is like, so why would then somebody be open to selling you a property and keep the debt in their name? Well, the truth is we actually improve a lot of those sellers' lives financially. And it happens a couple different ways. Number one is we take over their debt, so they're no longer burdened of that payment. Two is a majority of the time that those people are selling subject to is that they can't either afford it or they're behind on payments. So we help them catch it up. And then because we're real estate investors and we know how to maximize the property, we are then also making their payments on their behalf on time, which is also improving their credit. So it's really cool how these types of strategies, although not most common, can really help somebody in their lives as well that's in a financial burden. So that's why we use those strategies now to just further increase your ability to do real estate deals. There's always a mix, or we call it a hybrid, where you could buy it subject to, and then the seller could also finance, if there's equity in it, their portion of it as well. And that's a bit of a hybrid deal. So you have all these different tools.
That's creative financing 202, right? Or 102 right there. We're in 101. With that, I'm going to actually push us over. We are past the 20-minute mark. But I love everything that you shared. If people want to get more of this information, they want to start doing creative deals on their own. What kind of resources can you provide them?
Yeah, I'll make it simple for them. All you got to do is go to wickedsmartbooks.com/Gabriel Peterson. I'm sure you guys have this in the show notes. wickedsmartbooks.com/Gabriel Peterson. That's going to get you our Amazon best-selling book if you're a reader, but it also will give you the ability to jump into about a 50-minute, 45-minute master's class as well. That's absolutely free, and you can get walked through the step-by-step process, both on the front end and the back end of these deals.
Perfect. All right, with that, I am pushing us into the quick question round. Are you ready?
Ready.
Let's do it. It starts with education. Could be any form, could be a conference you've gone to, a mentorship program you've been a part of, movie you've seen, book you've read, any of them. I just need 2 recommendations, one for general life wisdom and then one for real estate.
Yeah, anything with Bob Proctor, I'm a huge fan of. I've listened to him over the past year, even though I started back in the day. I listened to him at least 30 minutes per day in order to continue to focus on that mindset for sure. As far as real estate, I don't have a real estate specific book other than ours, Real Estate on Your Terms. Go ahead and read it.
There you go. Have you been to any conferences, real estate conferences that you really liked, that you highly recommend, anything like that?
Yeah, great question. Besides speaking at this point in time, I'm primarily the one speaking at these real estate conferences, but I can recommend that ever since I started in real estate, I attend at least a couple conferences per year when it comes to education. And again, I'll throw it back to Bob Proctor and Sandy Gallagher. Those are the conferences. You got to get the mindset right, or the real estate doesn't matter.
There you go. All right, next question is for your younger self. If you could go back to the younger version of you who was just getting started, say he was just thinking about quitting his job as a bartender, go back to him, look him in the eye, give him one piece of advice moving forward.
Yeah, just like any good real estate investor would do, I would say keep more real estate deals.
There you go.
Don't sell them. Keep more of them. And the likelihood is I would have got involved maybe in some multi-families and things like that ahead of time, not just single families. But past that, I would have told myself to get after it sooner.
Everybody says that. They wish they kept more. And I'm going to put that in the same bucket as I wish I got started sooner. Anytime somebody says that as their piece of advice, we always point it back to you, the listener. If you have not gotten started yet, take this as a kick in the pants. Everybody who comes on here wish they got started earlier. So just go out there and get your first deal done. Doesn't matter what it is. Could be a wholesale, could be a creative deal like this. Just get something done, get in the game. You will not regret it later on. That moves us to the next question. This is about the US. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Great question. We invest in about 80 plus markets. Honestly, I think that most people right now are looking at getting out of Florida for creative deals. I would tell you to get into Florida. I think there's a huge opportunity because if it is a bubble market, then there's going to be a ton of subject to deals. And there's still lots and lots of people out there that are going to need to live in Florida and want to buy properties on certainly on rent own and have that opportunity. So I would keep an eye out for that, especially with the super high foreclosure ratio.
There you go. All right. We didn't really talk about marketing or about generating leads. So the next question is about that subject. It all starts with getting in contact with the seller. So what is your favorite way to find good deals and get in contact and generate new leads?
Yeah, best ways to get into deals with no money down is direct to seller. That is making phone calls. It still works to this day. You got to get on the phone, learn your scripts, and reach out and solve those people's problems. Step 2 is going to certainly get involved in your local networking groups. I know it sounds absolutely insane, but you got to go out there and tell people what you do and solve the other investors' problems as well, because that's where additional deals are going to fall on your lap for sure.
Cool. All right. Next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, many times things go wrong, but that's when we get to learn a lesson. So what was the deal that went a little sideways for you? And then what was the lesson you pulled from it?
Yeah, back in 2019, we had a higher than normal default rate with our tenant buyers. And what we realized was that we were accepting buyers to get the payment paid ahead of time, meaning that we didn't have to make those mortgage payments, and we're accepting lower than average non-refundable deposits. I promise you that is what greatly affected us. Not day one, but a year or two down the line. So make sure that your tenant buyers have good non-refundable deposits.
Yes, 100%. And I'll just put that in the bucket of stick to your criteria. We say this also, it's a common theme on the show. Whether it's your due diligence requirements, your tenant buyer requirements, whatever your requirements are, stick to them. So there's so many times that you're going to want to go away from them just a little bit just to get the deal done, but never do that. It's never worth it. It's going to come back and it's going to bite you. So always stick to the criteria that you put it laid out when you get started. And that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Yeah, we're on all social media platforms from YouTube to Instagram. We have lots and lots of awesome material that we produce on a monthly and weekly basis. If you go to smartrealestatecoach.com/YouTube, go ahead and watch those videos. Or if you want to connect with us directly, go on our Instagram, Smart Real Estate Coach. Go ahead and make some comments, and we'll keep giving you that information to get you involved in those real estate deals.
All right. That wraps it up. Thank you very much for hopping on the show.
Yeah, thanks, Gabe. It was a pleasure.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe, at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.